Okay, welcome, my distinguished mentees for the Global Family Finance Conference. And thank you once again for signing up for the mentorship program. We had already kickstarted the mentorship series and program by giving you an assessment on your personal finance prudence. So far, only two of you have taken that assessment. I will please employ others who haven't to please take that assessment. It's very important. And then after the assessment, we gave you a series of lessons. So the lesson began with lesson 1, which talks about your personal finance journey. And from the outcome of your submission from lesson 1, I discovered that you only listed out short-term, long-term, and medium-term financial goals, but you have not articulated how to effectively translate those financial goals into results. So this series we are having now is to enable you translate those your financial goals that you submitted to me, stating your short-term, your medium-term, and long-term into a roadmap that can translate into financial results that are specific, that are smart, that are achievable, that are realistic, and then time-bound. That's the SMART acronym. So let's see, what will you learn in this series on developing your personal finance journey? Okay, we want to explain the issues and concepts relating to your overall financial process of planning. And then second, we want you to understand the goals and the objectives of your personal financial planning. This is very important. So what do you mean by personal financial planning? It's a process of meeting your life goals through a proper management of your finances. I say again, it's a process of meeting your life goals through a proper management of your finances. So your life goals could be you want to build a new house. It could be that you want to acquire an estate. It could be that you want to start a business. It could be that you want to expand your existing business. It could be that you want to plan for a very robust, profitable retirement scheme. Whatever your life goals are, you need proper management of your finances. And how we can do that is what we'll be looking at in this series. So when you talk about personal financial planning, what does it really mean? As I said earlier, it's a process of developing a personal roadmap. From what I saw in your responses, you don't have a roadmap. You just have them listed out. And the way they are listed out, they are just mere aspirations. But you need a roadmap to be able to translate those aspirations or goals into reality. So how do we go about creating your roadmap to your financial planning? That's what we want to look at in this short video series. So please pay very good attention. To create your roadmap, you have your input and then you have your output. Let me start with the input. Your input to your financial planning process are 1, your finances. That is your income, your assets, and your liabilities. These are part of your input. Your goals, your current and future financial needs. Do you know what your current financial needs are? Do you know what your future financial needs are? And then, of course, your appetite for risk. In the course of our mentoring series, you'll be required to take an investment risk assessment. Let us see how well you're able to take risk in making investments. So this is the input to creating your own financial planning roadmap. The output is simple. The output is a process of planning that tells you how your money can be used to achieve your goals, keeping in mind that you have issues that relate to inflation. Okay, you have real returns and then you have taxes. So with the inflationary trends in the business world today, in the global economy today, How does it affect your financial planning? How does returns on your investment affect your financial planning? How do taxes, that we impose on assets affect your financial planning? These are the outputs to setting out a good roadmap to a sustainable financial journey. So what are the benefits of having a financial plan? First, it provides you direction and meaning to your financial decision. Most times we spend without having a financial plan. And when you don't have a financial plan, anything you see, you buy on impulse, you spend on impulse, you purchase on impulse. But with a financial plan and a direction, it helps you to take wise decisions when it comes to your money investments. Then it also allows you to understand financial decisions and how they affect the areas of your finances. How your decisions, your financial decisions, affect areas of your entire financial status. So this is very important for us to note. Now, it is important that for you to maintain good financial planning, you need the services and the help of what I refer to as a certified finance planner, CFP, certified finance planner. You need expertise in areas where you don't have enough knowledge when it comes to your finances. For example, a finance planner can help you evaluate your level of risk in your investment portfolio, okay, or adjust your retirement plan due to family circumstances or changes in family circumstances. So you need a professional opinion about your financial plan, that you need to develop for yourself. It's very important that you understand the services of a certified finance planner to assist you. So how can this CFP assist you to achieve your goal? The goal is that you have peace of mind, okay, as you invest, as you grow your financial plan, you have peace of mind. First, it helps you to identify what your financial goals are, and then focus your investments, okay, towards achieving those goals. Very important. What are your financial goals? Then how do you focus your investments in achieving those goals? And then you focus your investments as well to create wealth through please note this, through a timely and appropriate investment. And then you can also secure peace of mind through proper financial planning that will create wealth that ensures you are financially secure and then you are on track to achieving your financial goals. It also helps you create financial security that prepares you to overcome expected and unexpected ups and downs, that throws at us, such as sudden illness or retirement, or as the case may be. Then lastly, a good financial plan helps you to stay 2 steps at least ahead of inflation. If you have financial plan and inflation swallows up your financial planning, the entire process is useless. But a good financial plan will help you to plan and invest right, so you are 2-3 steps ahead of inflationary trends. These are the benefits and importance of having a financial plan. In the old part of time, we had the old way of planning our finances. What were we doing then? We used to get the services of an insurance agent, we get the services of an attorney, we get a stockbroker, we get a certified professional accountant to help us with our financial planning. I'm not saying that they are absolutely wrong now. They are still good, but there are better ways in which you can take hold of your financial planning. The disadvantage of still relying on this old planning process is that, one, it costs you a lot of money because you have to pay a lot of money for all these professional services. You pay a lot of money, you pay a lot of fees, and then you have different professional advice from different professionals. Therefore, you become confused as which plan should I go for? Which one should I drop? Which one should I pick? But when you take charge of your financial planning, you need to follow a 6-step process that will enable you to take charge of your financial planning. Don't get me wrong. I'm not saying it is out of date to use insurance agents, to use stockbrokers, as the case may be. But you can take more control of your financial planning by following a simple methodology or steps, okay, to your own financial planning. And what are these steps? First, you have to determine your own financial situation. What is your current financial situation? That's the first step. You have to determine that by yourself. No one can do that for you. Determine your own financial situation the way it is currently. Second, then you must develop financial goals. Okay, and then you must identify alternatives. Okay, to your course of action. Okay, first, assess your current financial status. Two, you must develop a financial goal, and then you have to identify alternatives to take a course of action. And then you evaluate those alternatives to see how well they are working, and then you create and implement a financial action plan. And then finally, you reevaluate, and then you review the plan to see how well it's working. It's called your personal financial planning model. I will recommend that you go through this model in making your financial planning and decisions. So we have these 6 steps, okay, which you will see on the slide that we're giving to you to read to get better understanding on them. I also want to introduce to you what I call the 5 A's of your personal finance planning. So these 5 A's are: first, awareness. Awareness means that you must analyze your current plan. The second A is analysis. Okay, you must have a way to analyze your financial current situation. Okay, and then look for a way to optimize your financial plan. And then you have A. The third one is A. The third A is alignment. Okay, you have to formalize a plan of action that will take you from where you are to where you want to be. So it's important to know where are you now in your current financial journey and where do you want to be. And then the next A is action. You implement a plan of action. And then finally is accountability. You monitor and you supervise. You monitor and you supervise. The 5 A's to financial planning. You can also adopt the SMART acronym. Okay, every financial plan you have must be specific. It must be measurable. It must be achievable. It must be relevant, and then it must be time bound. Any financial goal you have that is not time bound is not a goal. It's just wishful aspiration. So you must move yourself from wishful aspiration to a proper financial goal that has a plan and a time frame for meeting your financial goals. Okay, so you can see there on the slide, you have the SMART acronym that talks about how to have a profitable financial plan. So in setting your SMART goals, please, you must have an action plan that focuses on the action items. What are the action items that you need to get in your financial plan? And then, for example, let's say you want to build an estate for yourself. You want to build an estate. That could be one action plan, okay, or action item in your financial plan. So the next thing you will do is, what are the expected completion dates for you to acquire this estate? And then what is the actual completion date? So you have expected completion date, and then you have actual completion date. For every item you have on your financial plan must have an expected completion date and also an actual completion date. And then please, you must also note what are the potentials, okay, in terms of obstacles and solutions. Because every plan you have will definitely have obstacles. So you must be able to figure out, what are the likely obstacles you will face on your journey to financial freedom, and then what are the potential solutions you will profile to mitigate those obstacles when they do occur. All right, so you break your financial plan into short-term, medium-term, and long-term. So for example, using our existing example, you want to acquire an estate. You want to be an estate owner. Could be your financial plan, item on your financial plan. So in the short term, do you know the estimated cost for acquiring an estate? Okay, what's the target complete dates for achieving this item on your financial plan. What amount are you saving weekly in order for you to achieve this goal? That's for short term. And then for medium term, which helps you to drive into your long term, you also have to have an estimated cost of what it means to have and acquire an estate. You have a target complete date for that, and then the amount you save weekly. The same thing you do for your long-term financial plan. So don't forget, you have short-term, you have medium-term, and then you have long-term. So what are the tips you need to make the most of your financial planning process? I will start by saying, number one, start now. Start now. And since you have signed up for this family finance mentorship, it means that you are already on your way to financial success, because you have to start now. Even if you are in your 30s, start now. Even if you are in your 40s, start now. Even if you are in your 50s like me, start now. There's no time that is too late. Start the process now. Okay? Every day counts. Then be honest with yourself. Ask yourself, do I have all it takes? Do I have all the knowledge? Do I have all the skills that it takes for me to achieve this goal? Answer is no. Please seek for help when needed. Seek for help. And then 3, be sensible. Okay? Be sensible. Set sensible and measurable goals for yourself. Make sure that your goals are specific, okay, in line with your own expectations of the results you want from your financial planning. And then review your plan and your financial situation periodically to adjust to changes as at when needed. Always review the performance of your investments and then pull it out if needed, and then reinvest the money elsewhere. It's important for us to always review your current investment performance. It's important. And then the 6th one is be hands-on. It's your money. So you have to keep your eyes where your money is and then monitor how you invest and the proceeds that come in from the investment yourself. You must create time to monitor your investment plan from start to finish. So the scope of your financial or personal financial planning involves the following. First, you must do proper risk management and insurance planning. You manage your cash flow, okay, your cash flow risk through sound risk management and insurance techniques. Again, you must also have good investment and planning issues. When you have investment, you must check out for issues that have to affect your planning. Create and manage capital accumulation to generate future capital and cash flow for your investment. And then you must have good retirement planning, to ensure financial independence at retirement. Okay? You must have good task management planning. Okay? You have to look for ways in which you can reduce your tax liabilities by freeing up cash for other purposes. And then your estate planning. You must plan for the creation of your own estate. You must plan for the accumulation of your own estate. You must plan for the conservation and distribution of your assets. When I say estate planning, that is your investment plan, it's your estate. So you must plan for the creation of that investment. You must plan for the accumulation of your investment. You must plan for the conservation of your investment and then the distribution of your assets. They are very important. These are the scope to your personal financial planning. And then finally, your cash flow and liability management. You must be able to maintain and enhance personal cash flows through your debt and lifestyle management. So you watch out your family expenses, watch out your social expenses, watch out your recurrent expenses, watch out your operations expenses to ensure that your cash flow is at top notch. Because if you have cash flow issues in managing your investment planning, you have difficulties in realizing your investment plan. So you must ensure that your cash flow and liability management is top notch. So these are the areas that you must focus on to have a good financial plan. Now, having gone through this, you can now proceed to lesson 2 of the Family Finance Mentorship. So we'll send you another link, and then you take the activities in there, the exercises, and then the notes. Thereafter, we shall review and go to the next phase. Thank you and have a wonderful relationship with us.